Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast, episode 34. Today's date is August 15th, 2018. It is Wednesday, my dudes. What is up? My name is Nathan, and with me, as always, is the gluten-free Jason Bessing.
What is going on, Nate? What's up, bro? It's Wednesday, my dude.
We're back.
We're back, baby. And we had a meh day, and that's been the kind of the same song and dance for the past few days. Dow down 137. That was lower. We were down at around the 250 mark earlier, so we came back a little bit.
Yeah, it opened really low.
Yeah, we sold off. NASDAQ at 90, down 96 points, and S&P down 21.5 points. So down day across the board.
Can you hit us with those week numbers since it's been like a week?
A week? You would have to give me a second while I pulled up some charts.
Okay.
But going right back to we still have the Bitcoin sitting at 6,300, and she's been an interesting story.
Get your buys. She's got good support.
We talk, not we, but the general crypto sentiment. You know how like we're all connected, kind of.
Okay.
The word on the street is that Bitcoin has the super damn near
got a lot of support.
Godlike support at 6,000.
It's got a ton of support.
You knew I was gonna fucking say it.
I'm looking at the charts right now. It's got a ton of support.
It's that's really kind of beating into our brains right now, and
I hate to tell you people, but there's like a fuck ton of volume still coming in this year.
Bro, it's only getting bigger. There's only more platforms coming out. There's only new trading desks coming out. There's new apps that are coming out with financial technologies that make it easier to buy and sell Bitcoin. So it's a very interesting thing. It's still very highly speculative, but dude, that's 6,000 support. We did hit in the 5,900 range, but it was like for 20 minutes.
Dude, if that wave comes crashing, everybody just panic sells.
I don't think it'll happen.
No.
Real quick, while
there's
we're
a bunch.
on,
that means a bunch of people are holding around like 6,000.
Oh, there's a lot of people holding, and there's a lot of people that have orders in.
Yeah,
I'm
sure.
6,000.
I bet you they do. Yeah.
While we were on the subject of cryptocurrencies, I came across a very interesting article I wanted to share with you today. The Ethereum co-founder, Joseph Lubin, came out and basically was interviewed by Bloomberg, and I wanted to quote him real quick, said that the value surges of the past year were just another bubble, like the previous 6 big bubbles, each more epic than the previous one, and each bubble is astonishing when they're happening. So basically he's saying that he has absolutely no fear about the downside that Ethereum has been hitting. And she's been getting pummeled, dude. She was at like 1,300.
I like that quote about the bubble.
I do like that because
each bubble is so much better. It's much more epic than the last.
Yeah, and he's saying
if you
that
look at the Bitcoin chart, like Bitcoin's had its bubbles, but none have been as big as this one. I can't imagine like what the next one could be like.
You never know. I tell you, I'll repeat myself again and again. I don't think it's one and done, bro. There's no way. There's very little regulation on this thing. It's super secure. It's just.
How much
I'm playing
of your
portfolio
are you putting
I'm
in?
playing it like gold. I'd like to keep around 7 to 10% in cryptos.
Real quick.
But I just wanted to share that. I thought that was very interesting. He seems to be extremely bullish on his creation of Ethereum, and Ethereum's kind of been getting hit harder as one of the altcoins. Same with Litecoin. Those two seem to be getting hit pretty hard. But I just wanted to share that with you. I thought that was very interesting. And
you ready for the market news?
Anyway, yeah, that wasn't even the news. Let's go ahead and hit the market news with Nathan Oliphant.
All right. So let's go ahead and start with the Turkish lira. Who knows what that is? Raise your hands one at a time.
I do. The only reason I would know that, if you would just tell me that real quick, I'd be like, okay, well, the lira was Italian currency, so I
Was it
imagine it
really?
was Turkish lira. Yeah, before they adopted the euro, it was Italian lira.
Wow.
Fun facts with the gluten-free Jason Bessing. Anyway, go ahead.
Okay, so their currency kind of like dipped a bit, you know?
Dipped a bit. I think it lost like 25% of its value in a day.
Yeah.
So that's a lot.
It went from like 20 to like 14 between like the 3rd and the 12th.
And why was
18 to 13. I don't know why. What happened?
Trump doubled down all metal tariffs with Turkey. And I believe that was a play because Turkey was a nice, big, beautiful ally of the United States for the longest time. And over the past decade and a half or so, they've really taken a cultural shift into more of a regime. And Trump, of course, doesn't want that. He's going to bring something to the table because Turkey can be a very significant ally with the United States or with, the United States and Europe together, or with the Middle East. So
Yeah.
I think he wants to pull them back his way. Says, hey, don't fuck us, bro. So on that news alone, there was massive sell-offs in the lira, people putting their money elsewhere, and I remember I read a thing that the president urged all people to dump gold and get liras. Well, if the currency is crashing, that's the last thing I'm going to do, bro. But anyway, I just that is interesting. Turkish lira, what an arbitrary little country.
Yeah, right? Also, big news, Macy's in the retail sector coming out with earnings. They beat earnings.
Beat
Correct?
earnings.
What did they lower guidance?
They actually raised guidance.
So we had a massive sell-off at Macy's today.
So therefore, there's a massive sell-off.
So those who were going long on
I think what
Macy's
you
got
saw
burned.
there, I think what you saw there was a lot of opportunity for the institutions to get out one last time.
This is it.
Numbers are good, news is good. Let's push into this volume.
Let's cut it
remember,
now.
they're pushing tens, if not hundreds of millions of shares of shit at a time, or owning them at a time. Tens, millions, hundreds of millions. 40 million owned by Buffett at Coca-Cola. He can't just dump that. He can't just all in one day. That volume, that would just cause crazy price distortion. So I think they used the good news sold into it. I bet she'll rebound, bro. I think she's going to rebound.
Macy's?
Yeah.
Do you think Macy will move into like the online sector?
They are changing their business model. A while ago, months ago, Kramer was going off about that the value in Macy's was in the real estate, not necessarily in the stores. It was the assets that they have. That's what helps maintain their value. And I think they are making major business model shifts in order to stay relevant in the game. Macy's is a little more experiential shopping. It's kind of like people want to go to Macy's.
Macy's has that parade every Thanksgiving.
They do. I bet.
How are you gonna get rid of that?
The Amazon Thanksgiving, the Amazon Prime Thanksgiving Day parade.
You know, like all the floats will be carried by drones.
Oh my god.
Thank you.
Oh my god.
Long Amazon. All hail the mighty Amazon.
Anything else going
on? No.
No, not really.
Yeah.
Kind of wrap that up real quick. I do want to talk about.
Oh wait, did we talk about Elon Musk going private?
No.
Dude, I don't know if we talked about that last time.
Big one.
I don't know if we talked about it last time. We'll talk about it again.
I don't think it happened last time.
Did it? I don't remember when it happened.
I don't know, but let's go over it briefly.
Okay, Elon Musk tweeted that he was going to take his company private at $420 Funding secured in tweet.
He fucking tweeted that, dude. Oh yeah, we did talk about that because they stopped trading on it for a while, and I remember talking about that. But yeah, but that's new shit has come to light.
Here's new shit. He's working with Goldman Sachs and other like top people. Let me see if I can see. God, he fucking like retweets everything. Can you not do that?
Yeah, dude, I was watching CNBC earlier, and they literally had a graph of each year of the past 4 years of Elon Musk's Twitter tweet count, and it's literally doubled every single year in the past 4 years. Like how many tweets he sends out.
Yeah, he says he's got support from like people from Goldman Sachs coming in hot.
Mm-hmm. In
like,
Saudi Arabia.
Yeah. I just fucking like, you can't like declare like a certain price.
No, you can't tweet that shit. That's very highly market manipulation.
I'm
he
like
just
buying
wanted
now, yeah. That's gonna shoot the fucking price up.
I think he wanted the shorts to get fucked, and he didn't care.
Fucking
because
idiots.
if he can make the stock go up, looks better for him, right? So tweet that shit, make everybody panic, push the price up, then the fucking shorts get out, they get fucked, they got to buy their stock back. Now you're sitting at 450, but like boom, I'm ready to sell at 520 now, boy.
Get out of here.
Fucking sketchy, man.
Stupid, man.
So, I don't know if he planned that. There are going to be some backlashes on him though.
He's got SEC looking into him right now.
And then yeah,
SEC.
And apparently,
does he use GAAP?
Funding was never secured. They have to abide by They have to abide by those publicly traded. Absolutely. But there's even within that, there's still ways you can kind of shift money around to make things look better.
Yeah.
But they do, they are required to report in a specific way, but that doesn't mean it's not manipulated in order to give better valuations. $10 billion in debt, bro. Like, fuck.
Trending now on CNBC, SEC has reportedly served Tesla with a subpoena after Elon Musk take private tweet.
Oh, God. I feel like there's going to be some sort of settlement real quick.
Shares of Tesla
yeah, I did it. I'm sorry.
After trading.
Dude, what's the fine on that? 10 million? 50 million? 100 million?
I hope it just tanks.
You know what's also... I thought this was fucking hilarious. I was watching CNBC, this is about last week, and when Tesla's earnings came out, what happens when Tesla finally hits the numbers? Do they become valued like GM and Ford?
That's so stupid. It's just if they beat numbers, the stock skyrockets. When they fucking miss numbers, the stock skyrockets.
Because usually they didn't lose as much as they think. And then he gets on promising profits, and the shorts are gonna get burned. Flamethrowers are in, shorts are gonna get burned.
Flamethrowers are in.
Then these articles come out too, 3,000 Model S's delivered in the quarter, and they try to fluff everything up. I don't know, man. I just can't bring myself to pull the trigger on it.
You're not making money,
I know when
man.
I do, that's when I'm done. That's when it's done.
When's the point of it's just gonna keep digging the hole deeper and deeper? You're gonna keep needing investors.
Ugh.
Funding secured again.
You know, apparently the funding was never secured.
What does that mean?
They came out yesterday and said that the funding was not secured. And that never was. Sketchy shit, man. He's going down in my books. Mr. Change the World's fucking everything up.
Winner, what's your timeline on the short?
If I were going to short it, it's going to be within 4 years. It's the most shorted stock in the S&P 500.
That's unbelievable. I didn't know that. I'm going to short it. We should short it together. God, I bet you those fucking puts are so expensive right now.
Oh, dude. No matter which way you go, those premiums are... Honestly, you're better off buying and flipping contracts. But you're talking $30 grand to do that.
If I'm going short, I'm going half the price short.
You're going for... Dude, go for that 70% drop.
Yeah.
Anywho, that is
live trading on Rebel Trading Group podcast here now. Options. Let's see for 2 years out, because that's all I can do right now. For a put, and I'm talking like deep in the money, or out of the money.
What kind of prices are we looking at for like?
Okay, what am I
At
talking?
least go for like close to 50%.
Okay, so I'm
So what's
talking
that, like
about
the
like
180?
175-ish. Holy God, that's so expensive. Around $1,800.
For a 50% drop?
Yes, sir.
Jesus Christ.
Yes, sir. 2 years out.
What? So wait, it's per. That's per share or the total contract?
That's the total contract.
Wow.
Yes, sir.
How many are you buying?
I'm not buying any.
Hit me with the
I'm
number
not
again.
touching Tesla. Okay, so
Hit me with the price again.
Okay, so the price of Tesla right now, excuse me, is $337.75.
Okay.
So what's that in half? 7.75.
Just call it 165.
Okay, 168. So it's 170. How about that?
Okay. What's the 170 put in what, this 2 years?
Yep. January 17th, 2020. The 170 put is $16.83 a contract.
Oh my God, dude. Huh.
With a trade multiplier of 100 brings the total price to $1,685
Oh my God.
per contract. With Robinhood, you have free options contracts trading.
Check out
Commission
Robinhood,
free.
free stock trading. Yeah, that's interesting.
That's it for news, though.
Yeah, let's wrap up Tesla there. I did learn something today. I kind of wanted to share with you. I didn't know if you knew this. It's something I never even thought to ask.
Is this the market terminology with the gluten-free? Oh.
Not yet. This is just a precursor to it.
Let's get it.
If a options contract splits, if a stock splits,
yes,
what happens to the options contract?
Okay, it goes down like with the price. It goes down with the split.
Exactly. I didn't know that.
If it's like 2-to-1, and the stock splits 2-to-1, so does your strike price.
Strike price and the contract deliverable shares will go down to like 50.
Oh, nice. I didn't know that.
Or it'll double, because usually it'll double because it splits. So it'll be for 200 shares at half the strike price.
When I was trading, I didn't have any contracts into UPRO at the time, but when UPRO split from like 100, 150, it split like 3-to-1. I was watching options at that time. I was like, whoa, what happens like when it cuts?
Mm-hmm.
And it like shifts down. So it's kind of like weird.
It's crazy that I never even thought to ask that. Like I thought never really crossed my mind. I know about splits, but it was just interesting. So today our market terminology, Nathan, is more. I want you to deliver it to me. You ready?
Oh.
Can you tell me what a close? I'm sorry. We'll start that over. Can you tell me what a market on close order is?
Oh, of course I can. Of course I can.
You introduced me to them.
Yeah, I did. I love this. I like this because there's like certain limits of market on close orders. So what a market on close order is, you submit them. I think it's different for each exchange. I know like one's 3:45 before the market close, or 2:45. What time's it close? 4.
4. So 3:45.
One closes 15 minutes before, and one closes 10 minutes before. That's the last you could submit or take the orders off to the exchange. So what happens is at that 10 or 15 minute mark, they'll submit those market orders. So you'll submit these market orders, and you'll say at the last 15 or 10 minutes, I want these market orders. Rather they be sells or buys is a different story. You hear what I'm saying? So 15 minutes hits.
What's the advantage to that? Explain why someone would want that.
Honestly, I think it's a lot of funds. Like getting rid of the end of the day. Like a lot of mutual funds doing it too. Selling stuff.
It sounds like a day trader thing.
I don't know.
Basically, when you've given up, most day traders on paper don't hold stocks overnight. So if you enter a trade and it's kind of losing, and you're like, shit, let's see how it goes. I'll just mark it on, close it, and get it out of here. We'll try again tomorrow.
That's a strategy, I feel like.
I feel
But I
like
feel
that's
like I feel
yeah,
like I use market on close as indicators. That's we talked about indicators today. We're gonna do an indicator episode. Market
indicator. So
indicator episode. So if I see like a bunch of market on close buys, like if J.P. Morgan Chase is I see it a lot of times of it's called MOC buys, largest MOC buys, and it'll be J.P. Morgan Chase up top with a bunch of like shares or a bunch of like dollar worth of shares up top. And like that'll like in my mind I'll be like, okay, I see JP Morgan Chase going up tomorrow.
because it's a heavier volume.
Yeah, it's shooting if it's those market buys, those buy orders shoot those price up. And if it's at the largest MOC buy, it's shooting that price up a lot for after hours.
That's interesting. Now, how can you find these market on call orders?
I think you can like Google it. You just type in largest MOC buys, or if you want to see like what's gonna go up tomorrow, or
Mm-hmm.
largest MOC sells to see what's going to go down tomorrow. Now, like I'm not saying it's like for sure going to go down, but it's like a good indicator of what might happen. So like for example, if I'm seeing like JP Morgan Chase largest MOC buys is JP Morgan Chase, I'm kind of looking towards the Dow Jones going up. Because I see JP Morgan Chase in the Dow, and if I see a lot of Dow players in a largest MOC buy list, then I think the Dow's going to go up tomorrow. Play the Dow, baby.
Do you use that after the fact?
After the fact of what?
Like after the market has closed, that's when you look at the MOC orders and prepare for the next day?
Yes.
So you don't like look at them from the previous 3 days and...
You could look at like historical charts, like pinpoint them.
Yeah, I feel like that's... I don't know.
After hours is like a whole like after hours, like midnight, like pre-market data is like a whole different story. Like you don't know where it's going, like where the futures are heading.
No.
You'll wake up. It'll be like 2 a.m. It'll be like S&P implied open negative 0.9%, and then it'll be like 3 a.m. and it'll be like negative 2%. And then it'll go like 7%, and it'll be like up 2%.
You remember
like,
after the election? After the election, it was like
futures were fucking down.
2,100 down, 2,200 down, and then what did they do?
Contracts.
We
skyrocketed.
Went on the largest bull runs in American history. Jesus, those were the good old days.
Who would have thought?
Not your granddaddy's stock market.
Make America great.
All right. Well, thank you for leading the charge on that one.
You like that?
Educated me a little bit. Yeah, it's great. It's something I come across every now and then on my E-Trade.
Use it on your own. Use it at your own risk.
Yeah. Remember, there's a bigger picture to everything, so you can't just look at one and say X equals Y.
Sure.
Okay, that's how it works. It's not how it goes. You just want to get a bigger picture. You want to say that's
that's how I use the MOC, the market on close.
Well, that's good. Thanks for enlightening that. If you have any questions, comments, concerns, suggestions, insults, or corrections, please email Nathan or myself at Rebel Trading Group at gmail.com. Rebel Trading Group with 2 G's at gmail.com. We are also now on StockTwits, SoundCloud, Facebook, and YouTube with the Rebel Trading Group, or you can just simply search for the Rebel Trading Podcast.
Do you know what we need?
What do we need, bro?
We need to have a Bitcoin address for us, and people can donate Bitcoin to us.
I'm not going to make them do that.
We don't have to make people donate. That's the reason for donating.
Well, that's true. That's true. Isn't that what Patreon is, though? Except it's with fiat currencies?
I mean, Patreon's like a subscription service. If we just put the Bitcoin address out there and say donate Bitcoin, then we'll say thank you.
I told myself if I ever own a business, I will 100% accept a Bitcoin as payment.
Would you accept
just because I can?
Would you accept other currencies?
Absolutely. Well, I don't know about that because there's a lot of commission.
You would have like a bottom line.
What do you mean?
Like you would accept like Ethereum and Litecoin, but you wouldn't start
I would
accepting like Dogecoin.
Yeah, I wouldn't accept Dogecoin. I would definitely take any of the powerhouse altcoins.
Okay.
And I would really just do it just because I can. Just because I can.
That's
Now, real quick, you
volatile.
might know the answer to this.
I
It
might.
was just a question that popped into my noggin earlier.
Let's hit it.
Are other so right now one of the problems with Bitcoin, if I'm not mistaken, is that
Hold on.
it's the fee.
Hold on. I just want to make it known that I'm an expert in cryptocurrencies.
You definitely know more than I do. I can tell you that you know more than I do. Are some of the altcoins cheaper? Like if I was going to send you $10, apparently one of the problems with Bitcoin, other than the processing time itself, is that sometimes the fees can be very sporadic.
Yeah, I don't know.
Are some of these other ones way cheaper? Litecoin, Ethereum?
I think they all have scalability problems right now.
That's one of the biggest problems. Is that what's causing a lot of the volatility?
Yeah, if you give me a sec, I can look up like Litecoin fees. Transaction fees. Average transaction fee chart. So I need the 1 day, please. So right now it's sitting like around what is it? 0.04 Litecoin. So what is that? 0.04 times 56. It's about $2.24. If you're gonna send me one Litecoin. So the fee is relatively smaller with Litecoin, I guess.
Yeah. While you were going off on that, I don't know where you got that, but I actually just found an article on Motley Fool that has a kind of a breakdown in order. Tron is the cheapest. No idea who they are, but
I
if
know
you
some people
move
who are
up,
invested in Tron.
really,
Yeah, they said it's a 10-year project, so they said it's a 10-year project, so they're investing in it. Shout out to that motherfucker.
But I don't know what this is or how they're getting this, but it says that Bitcoin is one of the more expensive at $1.18 per transaction. Litecoin, it has about 20 cents. I'm gonna call it 20 cents, but I don't know like how big that is or what. I don't know. It just crossed my mind. I would accept Bitcoin though. I would accept cryptocurrencies if I had a business. So one day when we have a Patreon, if that's available, I will absolutely. I'll absolutely accept Bitcoin. So, right, if possible.
Let's get on to the topic of the day.
All right, man.
What are we talking about today? I'm so excited.
Today, we're going to talk market indicators.
Oh, what? We're talking about it today?
That's what you said earlier.
I didn't know we were doing it today.
You did just say that earlier on the episode. You said we're talking about indicators today.
I said we were doing it later, like a different episode.
Oh, okay. Okay. Well, then let's go back to the OG plan.
Remix.
What
are we talking about today?
Today we are talking the call option.
Whoa! Listen up, traders. It's time to get risky.
This is where the casino gets fun. So let's go ahead and break it down. I'm going to break it down really easy on what a call option is.
You get to play casino with stocks, and it's fucking fantastic and addicting.
It gets to put odds in your favor.
Oh.
And you have the opportunity to make a lot more money using less money.
You can do so much.
But with that, there comes a lot more risk, so you need to know what you're doing. So first of all, before we get started, I want to tell you that there are two types of options. There's the call and the put. Today, we're just going to talk about the call.
Oh,
it's a lot simpler.
Let's have a put episode, too.
Put episode might be our next one.
Yay.
That way we can just keep the ball rolling. So this will be options part 1, the call option. So a call option, very simply, is a contract between two parties that gives one party the right, but not the obligation, the right to purchase a stock at a predetermined price at a date in the future. And for that right, that person pays a premium. I know that's a lot. I know that it's kind of it's broad,
Well,
but
let's bring it down to
let's get into
practical
it.
terms.
Let's get into it. I think where the hardest part to kind of grasp and what you really got to hammer in your head
How do I
is
make
that
money? That's what I first said. When you told me all that, when you
how do
first
I
said
make
all
money?
that, I said, okay, great. How do I make money?
How do I make the money?
Yeah.
Well, to really understand what happens in a call option, because it's very simple, but it comes out very hard. So the best way to put it is that there has to be a buyer and seller behind every contract. That has to be beat into your brain. That one party owns the stock and the other does not. And there is a buyer and seller of each contract. That has to be beaten into your brain, and you have to understand that. Hell, you got to know about stocks too, right? Am I right? Am I right?
You gotta know. Okay, you gotta know about who you're fucking with and how to fuck with them. I feel like
Pretty
with options. That's like the main
That's exactly what it is. How am
That's
I
the
going to take this money?
fundamentals. That's like the deep core of options trading.
Yeah.
That's the big boys. You got to know who you're fucking with, what stock you're playing with, and how to fuck with them. Is it the right time to fuck with them? Are they like on like a 3-month binge streak to the moon? Is it time to buy call options while they're on the fucking planting the fucking American flag into the cheese moon? And on the way back to the moon? No, you buy puts, man. How do you fuck with them? You buy puts.
And puts her to capture the downside. But to
Yeah.
stick with the call option, so why would a person want to purchase a call option rather than a stock?
You mean theoretically?
Theoretically, what is the utility behind it
Sure.
and the mentality behind why someone would want to deal in these things?
Okay, so here's a perfect example. If something's trading at $10 a share,
I like the $10 analogy. It's the best way to go.
yeah, it's so
Go.
easy to think about. All right, if something's trading at $10, $10 a share on Monday, I can I can put up an offer to buy 100 shares on Friday for $11, right?
Correct. So basically, you would enter it because you think that the price is going to be higher in the future. So what you're doing is you're giving a little bit of money down in order to have the right on the contract to purchase 100 shares at a predetermined price in the future. So to use a very simple example and stick with Nathan's numbers here,
Right.
let's say the
Price,
stock is at $10. There's a part of the contract called the strike price, which is the price that you think the stock is going to go to. So let's say you think the stock is going to go to, you think it's going to go above $11. So
you
you
want it to
buy,
go above $11.
you want it to go above 11, and you're pretty sure it's going to. It's been trending upward. All the numbers are clicking. The patterns are looking good. You're ready to go.
In the best case scenario, if you're theoretically going to exercise this contract, the best case scenario would be for that like $10 stock to fucking go to the moon.
Go to the moon because you get to buy it at 11.
So let's say it goes up to like 100. Wow. Insane stock. Kramer's talking about it. He's saying it's a value stock. Everybody's buying it for the dividend now. And
Mhm.
you get to hold 100 shares at $11 while it's trading at 11, 12. It's having dips back to 90 and you're still trading it at $11 a share. So on Friday,
exactly.
I get to buy those shares. And let's say on Tuesday, it's got news that's saying we're making 20 million% of what analysts are saying. $10 stock goes to the moon. We're like, we can pay dividends for the next 30 years.
Well, that's definitely an extreme example, but it shows you like that big price movement
of what you have the potential for. You get those 100 shares, yeah.
Get to buy it at $11.
Now here's a risk.
There is risk to it.
Yeah, what if it goes the other way?
Well, let's talk the premium first.
Yeah, okay.
Let's talk the premium first.
You need
the
to talk
premium, to use an example, what might be more common, if a stock was at $10 and you wanted the $11 strike price, let's say for the end of that week, you might pay around 5 cents for it, 4 cents.
Maybe $10
Per,
at the most.
that premium is per share. So let's just say that let's say it's a 5-cent premium. Remember, the contract deals in 100 shares. So that 5 cents times 100, that premium costs you $5 out of your account.
We're talking
That
money
$5.
here, base.
So, and as the price of the stock moves, that premium will adjust with it. So, let's say the $10 stock you purchase with the $5 premium. Great, good, grand, great. You go to work, you go about your life, you decide to check on it on Wednesday. Now, that same stock is trading at $10.70. So that 5-cent premium you paid, people are now selling that same exact contract, let's say for 30 cents. So your $5 investment now just went to 30. That's a 600% return, and that's beautiful. So that premium adjusts with the stock price. To go back to Nathan's point, what if it goes the other way? Well, that $5 will very quickly shoot to zero because investors believe that there's no chance that the stock is going to 11 within that time frame that you chose.
Would you like to know how the stock moves in comparison, or the option moves in comparison to the stock?
Enlighten me.
They're called the Greeks, and there's 4 main Greeks. There's the Delta, the Vega, the Gamma, and the Theta. Theta is my favorite.
Theta's one of the most important.
Theta's a little bitch, so you need to watch out for her. I think Delta, okay, so Delta is sensitivity to underlying price. So that's if you're looking for that. I don't really get though, like, because I'll look at Theta and like I don't know if it's a ratio or if it's an actual like cent amount or dollar amount.
I think the Theta is the actual dollar amount of the contract.
Theta is, but Delta is what I'm talking about.
Oh, Delta. I don't really look at Delta too much. I think it's very arbitrary, in my opinion.
Here we go. It says Delta is typically shown a numerical value between 0 and 1. For a call option, it's 0 and -1. Oh, for call options, 0 to 1. For put options, 0 to -1.
And that's its sensitivity in relation to its stock value.
Yeah, we gotta look that up or something. I'm sorry.
No, it's okay.
I got the Investopedia link. I'll copy it right now. Send it to you.
Well, that stock that the option is attached to, we call that the underlier. So the underlying asset. So that option, every option contract has an underlier. It is a derivative of the stock.
The option
it is a security
is derived from the stock.
Bingo. And we trade basically the biggest factor in that option.
Isn't that like some Inception shit?
It's crazy because it's basically bundling together stocks and saying, hey, look, I don't want to buy it at 10, but if it goes to 11 in a year, I still want to buy it.
Okay, so a lot of people probably are lost because like you at one time in this conversation you said it doesn't cost a lot of money, but like lately you've been like saying like, wait, if good stocks are trading around like $20-$30 and I got to buy 100 of them, that means I got to buy like 3,000. I don't have $3,000.
Well, that's not true.
Tell me about it.
You don't have to hold the contract to its expiration date.
Keywords.
For example, let's say you want to deal with Amazon options. Amazon, I'm just going to use an easy number, is sitting around $1,900 right now, $1,900 a share. Well, in order to deliver 100 of those, you got to have damn near $110,000.
That's a lot of damage.
120,000. I'm sorry, excuse me. That's a lot of money.
That's a lot of damage.
People, almost everybody cannot actually afford that. So, there's 2 things that can happen. You can either choose to sell your contract prior to its expiration date, and you can lock in any gains that were obtained through that premium. Because remember, that premium adjusts to the price. So if there is profits, you can lock them in by buying the contract cheaper and selling it higher. Or if you so choose for whatever reason, you can hold the contract until its expiration. It will expire what we call in the money because it will have value. If it expires in the money, your broker will purchase the shares for you at your strike price and then instantly sell them and then give you the difference.
Here you go, buddy.
So it gives you the opportunity to play the big boy stocks without having the big boy money, and
Oh,
that's
it's
one of
got.
my favorite
It's
things
not
about options.
the weird. It doesn't. It moves like relative to the stock, but like it move like when it opens is like the biggest time options move because then you got in effect of like theta, which is time decay.
Hmm.
But you got to think of like as time goes forward, the value of the option becomes much more and more worthless, right? Or
Correct.
the value
So
gets less and less. It's getting less
correct.
and less
So
valueless.
that brings us to kind of the last point. Not really, but kind of scratch the surface. The time decay factor. Contracts close to their expiration date, as they approach it closer and closer, they will lose time value. Because when you purchased that call option from $10 and you are purchasing the 11 strike price, when when the time comes closer to that end of the week and that contract's going to expire, based on the likelihood of the outcome of hitting the strike price or going past it, that time decay will come out of the premium every single day. Does that make sense? Did I kind of?
Yeah.
So let's say you purchased it. So remember, the stock's at $10. We got the premium at 5 cents, so $5 total, and it's an 11 strike price. Well, let's say on Friday morning, the stock is at $10.15. It didn't move. It didn't go where we needed it to, and now we're fucked. We lost all our premium because of the time decay. There is no time value. The stock would have to go up damn near like 60%, or no, I'm sorry, 6% in order for it to start to bring some value to you. So basically, you will lose your money because of that time decay.
If you look at options at the strike price now, at this week, and versus strike prices from like 2 years from now, there's a big difference.
What do you mean?
I mean, difference in price.
And that's because.
I'm saying if it stayed the same price, that's kind of like a scale of like time decay. I feel
Okay,
like.
so well, let's go back to our $10 example.
Okay.
We want the end of the week contract. I think it's going to 11 by the end of the week. So I pay maybe a 5 cent premium because there's not a lot of time for it to happen, but there's a small amount of time for it to happen. So we pay that 5 cent premium. Now let's say I want that same strike price, but I want it in a year. What do you think I'm going to pay now?
You're gonna pay much more because it's more likely to happen.
If you had to kind of ballpark general basic stock, $10, what do you guess that premium would be for that 11 strike price? Probably somewhere near what, 40 cents?
40
50?
cent. It's more like a dollar, man.
Yeah, you're probably right. Probably closer to $1. So that what that really means is it's $100.
Yeah.
But you have a year for that to you have a year for that stock to go past 11. So what if in a year from now that stock is at 14? Well, you're going to collect that difference if you're still holding that contract. So you get to buy it at 11. It's valued at 14 at the end of the contract. You're going to pocket that $300 difference. Your $1 premium is now a $3 premium.
So when we're trading options, we're just when I'm trading options, if I'm dealing with bigger stocks and bigger players, I'm just trading the premiums. But if I'm actually doing like a covered call option, if I'm on the sell side of the option contract, then I'm actually buying the stock. Then I'll do that.
Mm. And yeah, let's backtrack to that because remember, we got to hammer in that idea that there is a buyer and a seller behind each of these contracts. Somebody wants the shares, somebody has the shares. So
Right.
let's go to the sell side of these things. What's this asshole's mindset that's selling these contracts? What is his purpose? What's his benefit to doing this?
Oh, he gets paid the premium that you pay when you buy.
He's going to rack in those
When you buy,
premiums.
you have to buy that premium. You have to pay that amount when you buy in. You're paying someone that. You have to pay someone for those shares at a later date.
Bingo. So let's look at his scenario. let's look at the seller's side to this scenario and the same stock. We got our $10 stock, and he's going to sell that 1 year premium. Let's go back to the 1 year. He's going to sell that 1 year strike price of $11, and he's going to sell it for a $1 premium. So he has 100 shares at $10. He's going to sell that he sold the 11 strike in a year out for a dollar. So what is really $100. So instantly, just by selling that premium in the snap of a finger, in the click of a fucking button, Nathan, this guy made a 10% return. Instantly, guaranteed. What's his caveat / downside to that, though?
Okay, you gotta hold on. You have to have collateral. You gotta have the shares. So you
Yeah,
you
you have the shares.
You have to hold on to those shares till expiration.
Correct. That's definitely one of his caveats.
If it goes down with the shares, then the contract becomes worthless. If at expiration, if it doesn't hit the strike price, the contract becomes worthless. It becomes zero.
And he just gets to keep that premium.
Yeah, the value of the premium became zero, but he got the premium. So if you bought that premium and it didn't hit you held on through expiration, it didn't hit that strike price. Let's say you paid $10 for the premium, 10 cents for the premium, and it reached zero, your 10 cents is gone. You're risking $10. It's basically a $10 bet.
Mm-hmm. Very good, very good. And the only other downside other than being forced to lock up those shares is it cuts off his upside potential. Correct. Because if the stock goes to $50 in a year, it just goes to the moon, gets bought out by Apple.
If it were doing that weak scenario, if it went to like $100, that guy that sold that contract basically got fucked. He got fucked so hard. He was like, dang, I could have gotten so much money for those 100 shares, but you just got the $1 per share, $100. Wait, that's $100, right?
Correct. So he is locked into getting that
$100 potential.
That $100 potential on the premium, and then the $100. Let us not forget that if it does expire in the money, he is obligated to now sell those shares at $11 a share.
Keyword obligated. He has
obligated. He now has to, because that contract has value, and if the person on the other end chooses to exercise it, which they will, they're going to want their shares. So his $10 stock, he will now sell it for $11. So he had 100 of them. So how much money did he make?
Wait, he
11. He bought at 10, sold at 11 on 100 shares.
That's $100.
There you go. And then in addition to that, he collected that $1 premium from selling the year contract. So that's throw on another 100. So the motherfucker still capped a 20% gain in a year.
That's really good.
That's pretty solid. It's pretty solid. So it cuts off his upside potential. That is the biggest downside to it. And it also locks in his profit gain. So he's stuck in that bound. He might get 10%. He might get 20%. He can't get any more. He can't get any less.
Here's the thing. Here's a woe of caution, I guess. Word of caution? Words of advice for trading options, from my experience. Be careful about speculation.
Yeah,
speculation will go the wrong way and throw bulls into the fire or bears into the fire.
Oh, absolutely. Absolutely. These price movements are very fast. We're talking like every penny that a stock moves
is $1. You
might make $1 or lose $1.
It's $1, yeah. One penny is relative to the dollar it moves.
So when the S&P goes up $4 in a day, you're looking at $400 a contract, potentially depending on your strikes and your expirations. But in general, if you're trading stocks that are at the money, next little thing right there.
Okay, here we go.
If you're trading stocks that are at the money, you're roughly going to make $400 that day, no matter what.
So you just said something, and I need you to explain it to me. I know what it is, but I actually explained it to a friend last past weekend. So there's basically three ways that you can look at getting these stocks.
There's out of the money stocks. Contracts. There's out of the money contracts. There's in the money contracts, and there's deep in the money. Out of the money, in the money, at the money. There's those three. If a stock is in the money, that means that it has value that the stock price, the underlier, is past the strike price, so the stock or the contract has value. That is an in the money contract. It
In
has
this
value.
case,
It's
for
in the.
calls,
It's going to get exercised.
for calls in the money contracts, for calls in the money contracts are below the strike price.
Correct.
Does that make sense? Because it's already past. If it's in the money, it's already past your strike price.
It's past the strike price, but it's got some time left on
Your
it.
strike price is below the current price. So if it were to exercise, you would gain that profit, the dollar difference profit.
There you go. Next, we have
In the
out
money.
of the money. Oh, that was in the money.
Mhm.
We have out of the money next. So when we were purchasing that $10 stock that we were talking about,
Uh-huh.
when you purchase that $11 strike price, that is an out of the money contract. It has no value. It only has value because it has time premium on it. It doesn't have any intrinsic value because it's not at or anywhere near the strike price. So that's out of the money. In the money, maybe you bought the 9 call or the 10 call, the 750 call. Those would be in the money or deep in the money. If you purchase that 5 call on a $10 stock, you're deep in the money, baby. So you have in the money and out of the money, and then we have at the money. That's your $10 stock. I want this price right now that it's trading at. I want it in a year from now. That $10 stock, I want to be able to buy it at 10 in a year from now.
You also have like near the money.
Yeah, there's near the money, so it's debatable. Like maybe the 1050 call, that would be near the money.
Okay, if I'm talking the further time length I have, further expiration time length, the closer to the strike price, closer to the share price, is more near the money. If I'm like $5 maybe, I'm still considering that near the money.
Yeah. Depending on the share price. So if you're talking about a $100 stock, near the money might be like the 103, 104.
Yeah.
That would still be
Which would not be considered the next option in the option change, the first option in the option change.
Yeah. So, to kind of sum it all up, I know it's a lot. It's a lot to take in. You might need to listen to the episode a few times, and I know even then you're not going to know what you're doing.
But when you're confused, write down what you're confused about and email it to us or write us in a comment. You have a comment to respond to today. That's our last segment of the day.
We do.
All right, first we'll do our little. Yeah. If you have questions, comments, concerns of what we just talked about, it's a lot.
It is a lot.
It's very risky.
But it's a very powerful tool that you can have. With great power comes great responsibility, Nathan.
So if you have questions,
that was Uncle Ben.
Email us at rebeltradinggroup@gmail.com. That's rebeltradinggroup with 2 G's @gmail.com. Check us out on YouTube. Leave us a comment, which you're about to respond to, right? Get to that comment.
We're gonna get to that.
YouTube.com/Rebel Trading Group. Check us out on SoundCloud. SoundCloud.com/Rebel Trading Group. Facebook /Rebel Trading Group. Check us out on StockTwits. What is it? RT. What is
Rebel
it?
Trading Group.
Rebel Trading Group.
We're there. So to sum it up, like I said, I know it's a lot, but there's 3 things that determine the price of an option. We have the time premium, how much time is left on that contract. We have the expiration date. I'm sorry, that is the time premium. We have the expiration date. We have the strike price. What is the contract going to get called at? What are we going to call away those shares at? And third, the underlier. What is the actual stock doing? So the contract trades separately from the stock. It's a different market. One's out of Chicago. One's out of New York. It's a completely different ball game, different ballpark. That's Boston. Anyway.
Can I say this? You can say anything. Okay. Options react really well to volatility.
Oh, they're your best fucking friend in volatility, bro. Woo! Quick spikes up.
My favorite trades, and we're talking about call options. My favorite call options are on triple leverage funds. Because if they're gonna go up, I just need them to move. If I want to bet on it, so we're talking about call options. If they go up, they're going up 3 times as much. So if I'm betting like a near the money call, and I believe that the price is going to go up, I'm going to buy that near the money call and let that price go skyrocket 3 times as much as the underlying value. The underlying value.
Underlying.
A derivative of a derivative. Here
You're
we go,
getting,
people.
you're getting some leverage on some leverage there.
Yeah,
and
that's insane.
That's pretty beautiful. It's a very
So use leverage funds in your favor
carefully.
if you want to get risky with call options. We need to talk about
So-
put options next.
Put options will be next. It's literally the same thing, just the other way. And we're going to talk about that. Remember, you call up, you put down. Put
Call
is
up.
playing the downside. Call, we want to play the upside. I wanted to start with call options because that's, as humans, we're wired to kind of think of like buying and selling rather than selling than buying. One last thing before I wrap it up.
Oh.
One of my favorite things about us, Nathan, I like to be on the sell side of these contracts. You like to be on the buy side of these contracts. I like the lock it in, get the cash flow, move on to the next best thing. You like, let me get a 400% return real quick. Let me turn this $40
back that ass up real quick.
Yeah. But with that, we've both had very different swings left and right. You've definitely had a lot more exposure to upside. With mine, I lock away my shares for a little bit. So it's I like that we have that yin and yang relationship when it comes to options. So anytime you want to buy a call from me, bro, just let me know. I got you.
All right.
Anyway, real quick, I want to wrap it up. I want to thank a YouTube subscriber. Mr. River SLV. I like it because I'm going to say that's River Silver. I like to think that's a ticker symbol.
He responded to your silver comments.
Responded to our comment on our last episode, skimming commodities. That was episode 33. Go and check that out if you haven't already. That was a fun one.
We had a question about like what's so valuable? What's the value behind silver? Like what can you do with silver and also gold? We also asked about gold, but
yeah, we talked about gold and like the functionality of precious metals more so than the buy and hold, the financial protection of those precious metals. So I want to thank him. He said silver is the most electrically conductive and thermally conductive and reflective material on the planet. I think I've heard that before. I've definitely heard the reflective. It's used a lot in the solar panels, and it's great for reflecting light off of buildings and shit. Also made a comment that it's shorted by big banks, and I'd kind of like a little expansion on that because I'm a conspiracy theorist. And that's right up my alley. I would not be surprised if precious metals and gold mining companies constantly get shorted in order to make the dollar appear stronger. So I do appreciate the comments. Feel free to keep them coming. If you guys would like to comment on our page, we welcome that. We would love to hear back from you. Get involved in the conversation. We'll definitely get back to you.
Wait, he said check out the silver to gold ratio. I got that pulled up. For the 24 hour, it's been up. For the 5 year, it's been up. What is that? Gold to silver? I don't know what the ratio is like.
Gold. Yeah, that was another thing I was kind of thinking. I'm not really familiar,
gold
but
to silver, so it'd be 82, like 85-ish. Right now, 81-ish. I don't know like what that is like, what that's relative to.
Mm-hmm.
You know what I mean?
So if you would like to expand more on that, feel free. You can email us. You can comment again. You can shoot us a message. We'd definitely like to expand, get in the conversation more. Maybe we can teach each other a few things. Silver and precious metals are definitely something I'm more interested in. And anytime someone can share that opportunity with me or our community, I like that. I'm all about promoting productive behavior. I
love learning. Every day that I learn something is always a great day.
That's why we do this. Like I said, if I can help one person or get to someone in financial savviness, what's the word? Better financial understanding of their lives and stuff, then I feel like we've done we've had a great success here. So thanks again. I'm just gonna call you Rivers. Thanks, Mr. Rivers. We do appreciate that. Keep the comments coming, guys. Are you watching anything this week, bud?
Oh, I am actually, and it's kind
Mm.
of relative to the show what we just did.
Oh, let's do it.
I'm watching ticker symbol FAS, and that is the Financial Bull ETF.
Mm.
Would you like to know what it does and what it tracks?
Yeah, give me a brief little description there.
Do you mind if I just read it off?
Yeah, go for it.
Okay. Oh, that's not what I need. It's a Direction Daily Financial Bull 3X shares, trading at 69 gigaties and 70 cents a share.
Giggities.
Yeah, the Direction Daily Financial Bull ETF provides a 3 times leveraged exposure to the market cap weighted index of U.S. large cap financial companies. Um, Honestly, basically, I looked at the companies and it's basically XLF times 3.
Mm. Yeah, does it make sense? Is Berkshire still the uh, biggest holding between
Yeah.
XLF?
Well, it's divided by JP Morgan Chase. I don't know if you saw that, but recently in the past year or past year, JP Morgan Chase was added more to XLF.
Mm. Interesting. And that is the financial sector. That's the non-leveraged version, right?
Yeah, XLF is the non-leverage, but FAS is the one I'm watching because I'm just I bought some option contracts for the end of September. You know,
Mm-hmm.
long term.
Mm-hmm.
That's my long term. 2 months is or a month is not
Two
really
months.
long term, but
Yeah, 2 months is a good out. You have a lot. You have some. You have time for things to happen. That's a
after
60-day
after
period.
playing with weekly contracts, a month is like a long time.
Yeah, playing the weeklies and the dailies.
Yeah,
Ugh, disgusting, bro.
it's complete
Disgusting.
filth in the weeklies and dailies. And the SPY dailies, they do midweeks and beginning of the week expiration dates. They're the only stock that I know that does that. Maybe the DIA. SPY trade, they do expiration dates Monday, Wednesday, and Friday.
Yeah, they have bi-daily.
It's
I guess is that
it's
bi-daily?
filth. Yeah, it's filth.
Is that bi-daily or tri-weekly?
I don't know. It's tri-weekly. Yeah, it's tri-weekly because I can buy it for all 3 dates next week.
Isn't that disgusting? So you
Yeah,
could
it's
sell
filth,
one
dude.
contract at $240, sell one at 245, and then sell another at
It's
250, and
filth,
just
and
get exposure.
sometimes it'll be stupid spreads.
The spreads on those bigger stocks, they have bigger premiums.
Spreads
It's
on
just beautiful.
SPY are tight.
Remember, you can
That's an
control
exception.
100. You get to control 100 shares of the SPY for just literally 1% of the cost.
I hope people are getting their mind blown right now.
Yeah. So
What are you
definitely
watching?
ease into it.
FAS is what I'm watching because
Well, you know what?
I got some call options and I want 3x leverage on banks. We're going for rates up in September, right?
It's probably going to happen.
I don't care. I've got it till September 21st. I'm gonna hold it until September. I don't know 13th.
Kind of see where he goes, where it takes you.
Or before whenever they raise rates, whenever that meeting is. I want to sell it before that meeting because I don't care what happens. I know there's going to be action, and I just want to be out. I just want the growth up till.
I think that might be priced in already. We
What do you
know,
mean?
it's no surprise that we're raising rates in September. It's 98% happen on the CME. So I feel like the stock has already reacted to that. People are going to get out right before. I feel like I don't know. I could be wrong. I'd have to know the emotions of every trader when the rates go.
I think financials are going to make a run up.
I hope so.
I'm
do have
sorry.
a little exposure.
I want financials to make a run up. What are you watching, dear friend?
Well, Nathan, you're going leveraged. I'm going leveraged. I'm watching my JNUG.
Oh yeah, it's in its 5-year.
Fucking getting destroyed. I don't have exposure to it yet. I have exposure to its non-leveraged version, GDX. Which is a gold mining ETF, but I like JNUG because the price of gold keeps going down against this strong dollar. It still keeps going down, and I don't get it, to be honest, bro. I don't get why it's just getting pummeled. I don't know if there's something I'm not seeing. I don't know if there's something I'm not reading. I look at the articles and it just continually it continually says global sell-offs, global sell-offs.
Was there
You would think.
Was there an increase of like supply? I don't know.
I mean, I don't think the global economy is doing all that great. If the economy is doing great, then gold's going to get pushed to the side. But no stock equities are getting rocketed up. We have occasional spikes, but around the globe.
We should run some Fibonacci numbers on this. Oh, we should have a Fibonacci episode.
I would like that, because then you could tell me how to spell that. So I'm watching JNUG. I'm looking at these things. I'm looking at gold 2+ years here. I think it's going to be a good place to be during
it's $7
financial
right
uncertainty.
$7.95. Holy wait, it hit the fuck.
Dude, it went to the floor.
Holy shit, dude! I might buy some options right now. Buy some shares.
Dude, yeah,
sell some covered calls. What the hell? What the fuck happened to gold, dude?
Dude, gold is just getting obliterated.
Wait, how is that possible? Wait, it was trading at like $9 the other day.
Yeah. Well, remember, it's triple leverage. It's got tracking errors. There's fees, so it's not going to act perfectly.
Are you buying some?
I don't know, dude.
Wait, buy some with me.
I mean, what's the 2-year call on this bad boy? At the money. Let's go. Let's do the damn thing. If this thing goes back to 15,
that's
you're looking at thousands, bro.
That's $700 you can put away.
You're looking at thousands if it works out in your favor.
At the money?
Thousands. If you buy at the money and it just returns to where it was, no shit, 2 months ago, a month ago.
There's a 10. That's the nearest price. There's a $10 call on JNUG at 792 share price. The nearest call for January 17th, 2020 is $10. I wonder what the January. I bet you they have closer prices at strikes. Yeah, the September 14th one has an $8 call. That's $75. I would do that. September 14th. God, that price is gonna. What's happening to gold?
I don't know. That's why I'm saying, like, I'm looking at it. I'm looking to start loading up, starting to get to be attractive prices to kind of just pull the trigger, keep going. And it's a long-term hold. Like, it's just something that can always be there. It's going to have its rally. There's going to be a recession. It's going to rally.
Are you calling JNUG $10 next year? 2019 January.
I'm calling it, bro.
This year. I wonder what that price is. Let me give you the price per contract right now. For a $10 call option, it's $97 per contract.
Disgusting.
Are you selling it? Are you selling that?
I would sell it. What's the premium?
$97. Plus your $200 profit.
$208.
So
Dude,
$300 profit.
That's like a 50% return. That's like a 50% return.
I might have to liquidate some assets tomorrow and get some JNUG calls.
Now you're buying them?
Yeah.
Long term? I don't think you have. You're not a long term. I feel like you're not a long termer. You gonna get out on a quick rip, or?
It would have to like tank more, right? I don't know. I don't know how I would do it. See, when it tanks, your option just like kind of crumbles. Like when you're selling it, like, what do? Buy back into it?
I don't know, man. Do you average down?
Buy back into it, sell what you have. That's what I did with GE.
Kind of like short sell yourself?
Yeah.
That's always fun. Take some balls. Take some huevos, man. I think this is an episode, my brother.
JNUG and FAS. Triple leverage, 2 triple leverage funds. They're fun to play options on.
Wait, one's banks, one's gold.
Let's go, people.
The Bulls and the Bears. Let's go, baby.
Let's go.
Let's go.
That's a set.
If you have any questions, comments, concerns, suggestions, insults, would like to comment on anything that we talked about, want to correct me, we are at rebeltradinggroup@gmail.com. Hit us up, rebeltradinggroup with 2 G's @gmail.com. StockTwits, Facebook, YouTube, SoundCloud. Our newest 4 episodes will always be up on SoundCloud. If you would like a full archive of all of our videos, those will always be available for free to you, my favorite listener. on the YouTube.
Shout out to River Silver, right? What's his name?
I'm just going to call him Mr. Rivers. So, thanks again. Get back into the conversation. Maybe you can tell us what's going on with gold. And,
be part of the conversation.
Yeah, guys. Happy trading.